the administrator announcing this push to the moon, right? All of these are big ticket government spending, and no need to mention, the sovereignty trend international that kicked off around the Trump administration came into being. And we've seen massive upticks in foreign government budgets. So the government spigot is wide open.
From the Defense and Aerospace Report, this is The Downlink, a podcast about the intersection of space, the space business, and defense. Not just what's over the horizon, but what's happening above it. I'm your host, Laura Winter.
This week's episode lands at the mid-year mark. That's also the close of the second quarter. So that means we're taking a look at the biggest space business moves in the first 6 months of the 2026 calendar year. Yeah, I know, SpaceX dominates the headlines. After the gargantuan IPO, it announced that it was buying another AI company. It just issued bonds. This coming Tuesday, it will join the NASDAQ 100, and its stock price is bouncing up and down. But SpaceX just isn't nearly the only important space business story. In fact, the story is that there is a lot of activity. While George Pullen and Milky Way Economy is away, we've got Chris Quilty of Quilty Space and Lou Whiteman on the line to break it all down into dollars and cents. We may be in the most remarkable wave of acquisition deals, divestitures, capital raises, which taken all together tell a much bigger story about where the business side of space is going. Now here's our conversation. Hey, Chris, Lou, thank you guys so much for coming back on the Downlink podcast.
I'm glad to be here.
Back again.
Thanks. Could you guys take a moment and introduce yourselves and let the audience know what you do and where you do it? Chris, you should go first.
Thanks, Chris Quilty with Quilty Space. We are a boutique consultancy that does financial research on the space industry, investment banking, and strategic consulting.
And I'm Lou Whiteman. I'm a contributing analyst with Motley Fool, focused on aerospace and space and all of these fun things that actually do things instead of just boring software.
Thank you guys so much. As I was preparing for this episode and looking back at all the stories and the trends in space and business, I was actually blown away by just how much business activity has been going on. And I'm not talking about government contracts. I'm talking about pure play space mergers and acquisition deals, or M&A, some of which are from divestitures and initial public offerings. Of course, those are the IPOs. But all of this has just happened in the first half of this year and a lot in June. So generally speaking, what is driving all this activity, Chris?
Well, I think clearly the anchor to a lot of the activity and the capital inflows we're seeing are SpaceX. And it was the lead up of excitement around the SpaceX IPO. And, we're seeing the downside of that, as SpaceX moves, the market moves, at least the space market, that is. And, putting that aside, we've talked for, quite a while about the trends of capital inflow on the private side, venture investing, and some pretty interesting news, in the first 6 months of this year, we can talk about, further on, but record capital inflows in startup activity.
Yeah. I mean, this sounds critical, but if you give your kids an allowance, they're going to spend it, right? The real story, even before the SpaceX IPO, and maybe because of SpaceX, but this has been an incredibly popular sector. A lot of equities up a couple hundred percentage points since the beginning of 2025. You give young growth-focused companies a currency and they're going to use it. And I think that's what you've seen is just they've got money and they are putting it to work.
But wasn't like the space part of the NASDAQ a bit sleepy until recently? I mean, honestly, if you take a look at the history of just an exchange traded fund, right? Not just going after any particular company, but if you take a look at ARC, Space and Defense Innovation ETF, right? Before, it would go up and down, a few dollars here, a few dollars there, but Right now, I mean, it's up by double digits. Like this is a lot of popularity going on.
Yeah, absolutely. And I mean, we didn't mention it, but the reason SpaceX is going public at this time, obviously, there's the need for uh, capital inflows into the XAI business, and that's why the merger is happening. We talked about that on our last call. But in the big picture, the government spending environment is off the charts. Here in the US, you could take something like the Space Force, which was founded in 2019 with about a $25 billion budget. That's about the size of NASA. I think we're at 55 billion, like baseline without all the plus ups. So that's some pretty astounding growth. And then you throw in activities like Golden Dome. Again, a lot of reconciliation money that needs to come through, but we're talking hundreds of billions of dollars flowing into that. And more recently, with NASA and the administrator announcing this push to the moon, right? All of these are big ticket government spending, and no need to mention the sovereignty trend international that kicked off around the Trump administration came into being, and we've seen massive upticks in foreign government budgets. So the government spigot is wide open.
All
Yeah.
right. So yesterday, there were two germane and big developments, and we can start with the biggest one first. And that is Rocket Lab announced that it was acquiring Iridium for $8 billion. Now, both of these companies are publicly traded. Rocket Lab has a market cap of almost $60 billion. And just since the announcement, the stock price has jumped by more than 20% to roughly $102 a share. And after the announcement, Iridium is up by almost 24% to above $53 a share. Now, I've hosted both CEOs on this podcast, which may seem like a really big deal, but then there's Chris. Chris, you have the distinction of having been part of the effort to take Iridium public back in 2008 and 2009. So you kind of have an insight here. What's the play? Is it really, as Rocket Lab's CEO Peter Beck says, quote, a really smart deal, unquote? Chris?
Yeah. So I like the deal, though I do have to say I have mixed emotions. I have a plaque on the wall with an Iridium satellite named after me. And, as you mentioned, we've worked with the company for a very long time. But when I look at it in the context of the space industry, it makes sense from both sides. So let's start with the premise that satellite was a going concern, or sorry, Iridium was a going concern. They were generating huge cash. They've actually done a very smart pivot in their business into very defensible areas like assured PNT, their IoT business, their end-to-end business. They're just acquired Arion, the aircraft tracking. These are all high moat businesses where there's maybe one or two competitors in the world. And of course, they have valuable spectrum. And, I think the challenge here for Iridium, was part their investor base. They have a investor base that's focused on yield, not on growth of dividends and cash flows. And so it was always very hard for management to step up and make bold investments without destroying the stock. In the same vein, they were in play, right? I mean, their stock had a massive move after Amazon acquired Globalstar because Iridium has adjacent spectrum that could be valuable to Amazon. And there was a lot of speculation that Amazon would be the buyer for Iridium.
And I just want to jump in real quick. That deal was announced in April of this year,
Yeah, things are
right?
moving fast.
Yeah.
And then on the flip side, right, Rocket Lab has their own story, their own growth path they're taking. Peter Beck for years has voiced his desire to be a constellation operator, to instead of just building and launching them, to have a service business. And the fundamental challenge he's always had that it's pretty hard to work around is if he were to get into the Earth observation business, which he could do with a NOAA license, or if he were to get into the IoT business, if he got a Spectrum license, he would be competing with a lot of his customers.
And his spectrum possibly wouldn't have priority rights.
Potentially, but in this case, acquiring Iridium really doesn't create much channel conflict with his current customers because Iridium is a bit of an island of a company in the markets where they compete. Really, their only direct competitor across most of the places they operate is Inmarsat/Viasat, which is not a customer of Rocket Labs. So there's a very good mix here, and what I would expect to happen post acquisition, as I said, Iridium's investors were paying for yield. Once Iridium falls under the Rocket Lab umbrella, well, what do Rocket Lab investors want? Growth. So what you'll see is an Iridium being unshackled in its ability and willingness to invest in activities like a space-based VHF system, or perhaps new payloads to build upon their alt PNT capability, things that they've been doing and working on gradually, but I would expect those efforts to accelerate.
Yeah, it's interesting. Peter Beck's.
I actually have something very specific for you, Lou.
Okay.
Very specific. So you just hang on one quick second, because I wanted to point out something to the audience that I found personally really interesting about the announcement, because I did watch the Rocket Lab video announcement, and I really honed in on spectrum and priority rights. And the Iridium has been doing this for a long time, which means they do have the priority. And priority means that if somebody needs to use spectrum, that whoever has the priority rights gets to use that spectrum first, and then everybody else has to wait. And so if you're in a critical emergency or a military type situation or what have you, that is critical to your business vis-a-vis the government. And
Yeah.
so that's money in the bank, just having the rights
Well,
themselves.
and let me clarify upon that. Normally, when we're talking about priority rights, we're talking about the broadband constellations, which are operating in Ku and Ka spectrum.
Right.
And priority rights, they kind of matter, right? Because it is shared. Iridium's different. That's their spectrum, lock,
Yep.
stock, and barrel. No one can use it.
Exactly. Now, Lou, this question, yes, I did formulate just for you, because on Christmas Eve, you put Peter Beck on your CEO nice list. You said you love that he doesn't let investor excitement change his plans, that he sticks to building the company he wants to build. So is buying Iridium part of that same vision, or is Beck changing course?
Well, I mean, I don't want to speak for him. I'll note, though, that he said that this deal, it's been in the works for over 6 months. So this is not a knee-jerk reaction to an IPO or even Amazon, which I found is interesting. Look, it's funny because I don't know what I think about it based on some of the things he's talking about. I like Iridium's business today. I don't know if I necessarily want to see them, and I'm not saying they're going to do this, but I don't know, compete with ASTS or something like that with these assets. That's not what I see. But here, let me give you the very boring version of why this works. And I'm going to simplify it down, but I do think it matters. Iridium's free cash flow, just the amount of cash they generated in 2025, was about 300 million, just shy of 300 million. Rocket Lab's free cash burn last year, 2025, was 322 million. There is almost a glimpse here in just like you are adding with, and again, I'm going to go back to this because what we talked about at the top, like you give these currencies, what do you do with these stock currencies? Rocket Lab shares are up 400% since the beginning of 2025. You have a highly valued currency in which to buy cash flow, in which to buy earnings. That's almost always a great deal. I mean, I don't know if the stock, if I can justify the price today, you're justifying it based on the future, but you have a really, really, really strong currency in which to buy cash generation. And cash generation is the one thing that a business, no matter what stage you're in, you can't fake, you can't hide. It's just cash coming in. Their ability to take the cash that is Iridium, which again, I mean, if they want to invest into satellites, but they have a nice little CapEx holiday right now, I think, for a few years. So they don't have to throw tons of cash into Iridium today. They can use that cash flow to build out other areas. That part of it I really like. If they come out tomorrow and say, guys, we are going to put a couple billion into this and try and become the next ASTS or something like that, I may revisit then, but I really just like this as a core of a building block. Throw in the fact that Rocket Lab has been growing tighter with the Pentagon and I think has some visibility into what the Pentagon might want. And as a trusted partner, maybe, sees the world that way. I do like this deal. If you would have asked me last week if they should do it, I probably would have been skeptical. But looking at it, I really just like some of the boring parts of it is just kind of a cash flow generator.
Well, boring can be good, said some spokesman on a commercial about investing. But
Speaking of boring, where's George this week?
he's somewhere on the West Coast doing
Oh, okay.
something boring, I'm sure. But the other event that happened yesterday were the Honeywells, right? We've now got two, and both are being traded. Yesterday, Honeywell International broke itself into two: Honeywell Aerospace, the space side of the deal, and that's got a huge amount of space heritage, and Honeywell Technologies. Both companies will be part of the S&P on the day that we're recording. And the space company, Honeywell Aerospace, is also trading on the NASDAQ under the ticker HONA. And be careful when you spell it out because sometimes it takes you to Honda. And that is not what you're looking for. But anyway, Honeywell Aerospace is a tier one aerospace and defense supplier with 36,000 employees. Its new market cap is above $70 billion, and its shares are trading at above $220 as of this recording. It's being added to the S&P 100. So what is the strategy behind the breakup? And whoever wants to take that on, go for it.
All right. So just real quick, we're going to talk about conglomerates and conglomerate discounts. Okay. There are advantages, but if you think of the old Honeywell until yesterday, it was basically just a bunch of different businesses in a bunch of different sectors, which a bunch of different management teams all under one umbrella. And that there's a lot of advantages there. You have access to mom and dad's checkbook, but also you have to go to mom and dad every time you want money and you have to compete against your siblings and compete against mom and dad having to pay the bills. So you kind of don't control your destiny. And that's what's been going on inside Honeywell. Honeywell as a stock has been a huge loser. It's basically gone nowhere this decade, despite, as you say, having a
This
lot of
decade?
this
Decade?
decade. I mean, you basically going into yesterday, it was, I don't know, up a couple percent since 2020. And you're right, not just in the aerospace side of it, there's a lot of really good assets there. But look, some of it was some self-inflicted wounds, but a lot of it now, look, yes, or last week, that aerospace business, if they wanted to invest in a factory, they needed to go to the parent and the parent was saying, well, I don't know, because the automation business wants this, we want to
You got
pay a
to send Timmy
dividend.
to college or
Right, we got
something.
to send Timmy to college. Today, that Honeywell Aerospace, for better or worse, that management team, we are bringing in cash and we can allocate that cash as we want. Same thing for automation, the other side of this is split out, which is kind of a younger business that really needs to invest in the technology and invest in growth. Honeywell Aerospace, in a way, is a mature business. I don't know if they have like the margin opportunity and some of the things as a stock that I'm looking for in some other businesses, but their ability to now, whether it's bolt-on acquisitions, whether or not it's just, investing in capacity to hit this huge, huge commercial upcycle and all the opportunities in space, they control their own destiny today. And that's the important thing for investors.
Chris, quick take.
Yeah, I mean, quick take. I mean, I think this is a continuation of trend that we've seen over time of these conglomerates spinning off, their businesses. If you think about Ball, right, selling Ball Aerospace, and when we heard multiple rumors over the years of Boeing, potentially spinning off their defense business
And their space business.
and their space business, and I'm a favorite. I do think companies that are focused on one thing, they execute better. Their capital structure is more aligned, and quite honestly, the employee compensation, right, is more aligned with the equity outcomes of what management is driving towards. I think there are very few successful conglomerates. I can think of Teledyne, probably the exception to the rule of a company that does it very well. But I wouldn't be surprised to see more of these on a go forward basis, especially when you look at the valuations being assigned to space companies. If you're ever going to spin off your space business, guess what? Now's the time to do it.
And there have been others, which I want you guys to talk about in this next segment. Now that we've actually gotten the two big stories out of the way, which are actually pretty darn big, let's take a look back at what the first half of the year can tell us. I know SpaceX, right, is the dominant 10,000-pound gorilla in the room, but there's more to it than that. And we've had a lot of big deals and a lot of big checks, just like you said, Chris. So besides SpaceX, what was the one deal or check that you think we need to pay attention to? Lou?
Oh, okay. A couple. I really, all right.
Yeah, you just start with one.
Start with one. Start with
Okay.
one. I think
Choose one. Be kind.
L3 Harris was the most interesting company in the first half, but as one deal I'm looking at, what MDA did, carving off the kind of the space assets from RTX, that really, really intrigues me as far as the MDA is a neat little company, and they're kind of quietly acquiring a lot of, I think, real interesting
Okay,
assets.
tell everybody why MDA is a neat little company, and I agree, but tell them what they do.
Well, so they do a lot of things increasingly with this classified space, but MDA traces the roots back. I mean, how many owners have they had? But they're kind
But
of
they're
sitting
building satellite factories. Yeah. I
right.
mean,
Yeah,
they're actually trying to become the Ford Motor Company of the satellite bus world.
yeah. Now, in fairness, we hear that from a lot of people.
We do,
but
but they're
MDA is
actually
doing it.
doing
Yes.
it. Exactly.
Yeah.
Yeah. I'll weigh in on that one because we actually put out it's one of our quick takes. So it's out there on the website if you want to read it. And I'd tell you the two most interesting things about it from my perspective, MDA historically, other than the radar sat programs, did not build satellites. They were a component, subcomponent supplier. And they made a huge leap from that to building the Lightspeed constellation for Telesat. And these are big, I should know, 800 kilogram satellites. They kind of skipped the first step, building CubeSats and then ESPA class and working their way up. They're going backwards with this transaction. They're backfilling by acquiring Blue Canyon, a company that backfills their portfolio of satellites. The other really important element of this is it gives them a U.S. security cleared business.
And what does
they're
Blue Canyon do exactly? If you could just let everybody know what they're actually acquiring.
So Blue Canyon, it was a bunch of guys that left Ball, and they started out making reaction wheels and sun sensors components. And they, from that, built their first CubeSats. And then from CubeSats, they've got microsatellites and whole product line, most of which were developed, post RTX acquisition. And they've built out that portfolio, and they're, being a subsidiary of Raytheon, which kept them pretty separate as an organization. But they did bring them into the national security sphere. And so they have the government programs and the security clearances that MDA can back right into. And MDA's got a lot of stuff that they can sell to the US government, from, robotics to satellites to components that opens up a huge window of opportunity for them.
So anything in the private equity world that you guys are interested in?
I would say the one I was going to give when you said what caught our eye was actually ICEYE. This is the SAR operator based out of Finland. Started out at a time back in the late 2010s. I'm going to get a 2018, 2019 founding. They just priced around this month for $520 million at a $10.5 billion valuation. So, Iridium, which has been around for 25 years, just sold for $8 billion. I mean, that's an astounding growth path. And in a market where ostensibly they were competing against, domestic players here in the US like Capella and Umbra. You had established German, Italian providers of SAR systems. And of course, MDA, though they've got a really specific type of SAR satellite they build. And the point is, those guys have just trashed the competition. They've got a factory they're building out to make 50 satellites a year. They've cut deals with a half dozen countries from, Poland to the UAE and Japan selling SAR satellites. So they've diversified the business from being an operator into selling systems.
And they
And
manage systems for others, right? Like for Ukraine. Ukraine owns now, I think, 2 satellites.
yep.
And I believe ISI manages both of them for that nation.
So it's a really good success story. And what's interesting about it is today, it's a single product company, right? I mean, they do SAR, right? And they do it very well. And what we've heard now is the rumblings that they're looking for other ways to expand out into things like commercial SIGINT capabilities, perhaps adding, who knows, AIS or other sensors and building out a full intelligence suite rather than just a SAR technology provider.
Something I also found interesting, and I don't have the valuations to go with these prices or with these numbers. So please forgive me, and Chris, maybe you have it, or maybe you do, Lou. But in terms of private equity, Impulse Space closed on a raise of $500 million in June. True Anomaly, $650 million in April. Sierra Space, $550 million in March. But what was really big was iSpace, and that's not iSpace Japan. This is iSpace China, and it raised $730 million in February, and it's still a private company. So I just found that kind of fascinating, and perhaps it's something I need to dig into to understand, how does a Chinese space company raise $730 million,
Yeah.
right?
Private company.
That's
Yeah.
yeah, I
Yeah.
know. Right. So is it government funds? Exactly. That's why it needs to be dug into. Like what's behind that number really? Or was it, some sort of order to the Communist Party members or something like that? I don't know. Maybe that's very ungenerous of me. I'm sorry if I'm being lacking in charitable inclination here. But anyway, rolling along, there were other things that also went on, right? I mean, Hawkeye 360, it went public. So
Yeah.
so there were other things. So there are a lot of really interesting deals that have occurred in the first half. But out of all of that, was there a strategy fail anywhere out there?
I'm going to harp on this, and the
Go
data.
for it.
Well, the data says I'm wrong because it was a successful IPO, but I still wish SpaceX wouldn't have done the XAI deal. And I'll say in advance, I'm not for the Tesla deal that's eventually going to get done. I like this space business, and I don't know what to think of the AI business. So look, the IPO is a success. I'm wrong here, but to me, it's a fail to put it all together because other than the one guy who's running it all, I don't think the synergies are really there the way they say they are.
Here. I'm with Lou. I don't like conglomerates.
I mean, it's like, what kind of company is it? I was just in the Pentagon speaking with an officer with the Space Force, and I had to explain to this person that, yeah, SpaceX isn't a space company. It's an AI company that does rockets.
Yeah.
Yeah.
Or is it? I don't know.
Well,
It's like
come on.
nobody
I mean,
knows.
if you read the S1, you read their own words. They say that their new total addressable market is in AI.
Yeah.
That defines who they are. That's kind of like your mission statement, right? Because
It
that's your
it
total
is, but it
addressable
can be
market.
edited.
That's where you're going.
It can be edited in a year if moods change. But yes,
Well,
no,
yeah,
I
you
can't argue
could.
with that. Yes.
Yeah, I just think they said it, not me. I'm not exactly quoting word for word here, but yeah, that's what they said.
Okay.
Anyway, anything else?
So,
Oh,
I'm
the one thing I'll say, nothing in specific, but you talked about all the volume of activity. You talked about everything going on. Again, on same theme. It's just when valuations are high, activity happens. Inevitably, we will look back on a few of these and say they were strategy fails because that's kind of how this all works. But that's easier seen in hindsight. But when things get frothy, when things get active, not everyone wins, and that is a lesson as an investor I try and keep in mind.
all right. Speaking of the froth, SpaceX wasn't done with us in terms of froth either, right? SpaceX has given us this very interesting gift of a subject because I think it would be really useful for listeners to understand why, after completing what you called, Lou, a very successful IPO, it's the biggest ever, and raising a ton of money, why did SpaceX go to the bond market and take on debt? Wasn't the IPO enough? And why five different tranches?
Uh,
Because you
d-
can.
yeah,
The
exactly.
the time you raise money is not when you need it. You raise money when you can. That's business school 101.
Right. It's the Willie Sutton answer. Why, when you gotta have you can Google that, kids, if you want. But yeah, because the money is available. And look, they had a ton of needs for that capital. We talked about that when we talked about, a big chunk of that IPO money is going back out the door just to pay off the debts they have.
Right,
They
that
need,
$20 billion bridge
yeah.
loan that they took on in March ahead of the IPO, and I can't remember what the interest rate is on that bridge loan, but it's a bridge loan, so it ain't cheap.
And the tranches, the answer there is because they threw this out there and there was a ton of demand, and so they took advantage of it. And look, will you take it for this percent? Yes. Will you take it with this? This is the way these work. It is a great time to be raising money. They are going to need money. They're not done. This will happen again.
All right, as we are closing out this episode, I am at the favorite part. Oh, yes. It's predictions time. Predictions for the next quarter and or the second half of the year. And because I like to be kind to Chris because I know how much he loves this. Lou, give us yours first.
So for all of my maybe cynical talk about the frothiness and stuff, I don't think we're anywhere near done. As a stock guy, I look at these gains and I say they can't continue. My hunch is though it continues. If for nothing else, this is sort of a call option on a right tail event right now. And what I mean by that is you're investing a little bit of money in space on what it could become. I don't think that investors are suddenly going to say, like, wait, never mind. I don't believe this 5-10 years out is going to happen. So I think the enthusiasm, almost because they're solving such hard problems, and you can't in one quarter say, okay, this worked or didn't. I think that all of this excitement can sustain. And the most common question I get is, wow, I'm up 300%. Should I sell? And that's a really, really hard question to know. But my gut is no. My gut is this can continue kind of despite the maths.
All
Well,
right, Chris, let's have yours.
maybe I'll take the counter to that. A lot of this froth is being driven by a massive US government budget increase to $1.5 trillion. That ain't going to happen. We're not going to get a third reconciliation. All these budgets are going to get clawed back. Programs are going to get canceled. People are going to, freak out. And, I think it puts some headwind risk on stocks and valuations, which will reset. And then we'll move on. I mean, getting $1 billion for the defense budget ain't a bad thing, right? It's a pretty big pickup from where we were. But I think there's unreal expectations that have been priced in that are just not going to be achievable. And it's a political issue. I wish we had the money to spend on these things, because the way that they did it, like any good appropriator, you put the stuff that you want in the base budget, the stuff that you need in the reconciliation, running the gambit that they won't possibly cancel the stuff we need, but they will. And then you got to scramble and figure it out, because most of Golden Dome, it's in the reconciliation. It ain't going to get passed.
I think that just to kind of elucidate on that a little bit more, and having read some of the report from the House Appropriations Committee on the National Defense Authorization Act, is that they're really upset that the stuff that is necessary, that the administration considers necessary, is not in the actual bill, and that it's ending up in reconciliation or in a supplemental, because it reduces their ability to have oversight. So that tension has to be resolved, especially considering that the president's party has a trifecta right now. So that, when one season is okay, but two in a row might have been a bridge too far.
Yeah. Well, there is another possible swing at the bat. I mean, this is not new. It's just every year it was called the unfunded priorities list, which is you would do the same thing. You would put things that you need not in the budget. And then after the budget's passed, there's an official process where all the services submit this list of unfunded priorities, which happen to be things that are not only priorities, but things they need. And so you get plus up on that through a separate process. But historically, you're not pushing $500 billion through it. So you get a little love kiss on the way out, maybe.
Yeah. Anyway, gentlemen, Chris, Lou, thank you guys so much for making the time to come on the podcast.
Pleasure.
Thanks, Laura. Always fun without George.
You're so mean.
That's it for this week. For your daily dose of award-winning defense coverage, listen to the Defense and Aerospace Report with Vago Muradian. And for the maritime domain, listen to Cavis Ships with Chris Cavis and Chris Cervello. And get your air domain news and analysis from the Air Power Podcast with JJ Gertler and Vago Muradian. I'm Laura Winter. Thank you for listening.